John, you were in Toronto for the Prospectors Developers Association Conference. People call it PDAC. What was PDAC like this year, and where are we in the mining cycle?
Well, PDAC this year was the best it has been in quite a few years. Last year, a number of companies had paid for their booths, but didn't even bother to show up because it costs $4,000 or $5,000 for the booth 1 year in advance, but it'll cost you another $5,000 to $10,000 to actually show up and have your room and take care of everything. And companies were in such bad shape last year that some of them didn't even bother showing. This year, there were none of these empty booths. This year, the mood was positive. Registration of delegates was over 25,000, better than last year, still short of the 30,000 that was achieved during the peak years. But there definitely was a much better mood. There was money walking around, checking out the juniors, and it wasn't just the optionality type juniors that were attracting attention. Last week in Discovery Watch, when we talked about Osisko, I brought up this amazing phenomenon in the Windfall District, one of the sort of most disappointing exploration districts in Canada, undergoing 400,000 meters of drilling, no spectacular drill hole in sight, $100 million raised in February by 4 juniors, of which Osisko Mining took $82 million. And I realized last week this was a significant sea change in the attitude of institutions away from putting money into companies which have ounces in the ground and waiting for the price of gold to go up in order to make money. Now there is an appetite for projects where management can take control of its destiny, give management enough money, put the money into the ground, and come up with a discovery or deposit that works at the metal prices we have. And I talked about this on BNN, and the feedback I got back afterwards was from people, yes, we have been feeling this. Thank you for putting it in such an articulate manner. There is a huge change. And this is really good for the junior resource sector, because when you are giving companies a lot of money to properly explore a project, you're going away from this kill shot mentality that has plagued the sector for a long time, where the company is supposed to do the traditional target generation stuff of geophysics, geochemical survey, bring a target into sight, and then literally set up a sniper kill shot to deliver your 100 meters of 10-gram gold, which signals, yes, we have a discovery, we have a winner. In fact, that very rarely happens. The last time it happened was after Aurelian spent $19 million and was down to its last $1 million and set up a single kill shot that delivered the Fruta del Norte deposit, which translated into a 60-cent stock going to $40 and ultimately a $1 billion buyout. This type of approach now, it gives the companies the benefit of the doubt for 8 to 12 months. It shields the investors from having to react to every news release, there's no big discovery hole. And more importantly, when you're dealing with just optionality plays, in other words, deposits that require a higher metal price to be worth developing, you can rank them from, worst to best, and the market will price them fairly. And when you buy these stocks, you're still ultimately just betting on the price of gold. When you're dealing with these district type exploration plays, who's to say that it is the Windfall District companies that will deliver the home run, maybe the next Red Lake? Who's to say whether it's white gold up in the Yukon which will do it? You just don't know. And the importance of this is that the early money is not necessarily the smart money. There is room for new money to come into the space and find other exploration systems to put their money into, and any one of those could deliver the spectacular discovery hole that sets the glass half full. There's enough money now going into these so-called existing mineralized system plays, what I call hybrid plays, that we are in a very good position to see a major discovery emerge in the next 8 to 12 months, which is also when I expect retail to start arriving. In terms of sort of the retail presence at the newsletter presentation on Sunday, there was not the kind of presence that we saw during the height of the bull market, and even during the sort of last decade, compared to earlier when we had in the 90s and when we had Voisey's Bay and all that, where the retail audience was much bigger present. It's still very, very weak. I figure 8 to 12 months, then retail will come. Next year's PDAC will be much stronger. And with gold of course was not helpful during the past week. The bigger companies have been trending down as the January effect wears off. There's this big PDAC curse concern, so sort of a preemption. I think we'll be pleasantly surprised. This will be like 2006, where the market appeared to be fading even before PDAC, and yet in late March it turned around and violated the PDAC curse and headed up. And you know, a good sign of how strong the system is, regardless of the market trends, it's the Agnico Eagle and GoldQuest announced that Agnico was putting $23 million into GoldQuest at 60 cents, no warrant, and at a premium to the market price. That really kind of signaled that all the serious players are no longer really paying attention to what gold is doing tomorrow or the week after.
What's special about the Agnico financing in GoldQuest?
Well, GoldQuest is now in the permitting cycle for the Romero copper gold project in the Dominican Republic, which they discovered several years ago while we were wallowing in the bear market. It's one of these $250 million capex projects. The numbers suggest yes, all the IRR, NPV, everything aligns properly. It should be put into production, but it's not a huge type of project, the sort that you would expect Agnico Eagle to be interested in. However, at the same time, GoldQuest is currently in the midst of exploring the Romero trend. That's 14 to 20 kilometers. It's a VMS system. We talked about a few weeks ago about an intersection that they got, which appears to be peripheral to something big. At the moment, they're proceeding with their strategy of knocking off all the IP anomalies on there in the hopes of finding one where they get it smack in the middle of the VMS system rather than the peripheries where you still have to then vector in on where the goods actually are. What Agnico Eagle has in essence done is given them $22 million for a 16% stake in the company to go in there and see if there are multiple and perhaps better deposits similar or better than Romero. And it's not about the Romero, it's about the exploration potential. And the fact that no warrants or anything like that at a premium to the market, this is the new strategy of the producers outsourcing their exploration to juniors which have developed district-scale plays.
Discovery Watch with John Kaiser. We'll be right back after the break.
I'm Larry Ray, President and CEO of American Manganese, Inc., listed on the TSX Venture, ticker symbol AMY, A-M-Y, with proprietary patents in the U.S., China, and South Africa. Our focus is on recycling lithium-ion batteries for electric vehicles. China recently legislated the responsibility for recycling onto their electric vehicle manufacturers and importers. For more information, please visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
I'm Bill McWilliam, President of Cascadero Copper, CCD on the TSX Venture Exchange. Cesium is one of the world's rarest metals with a growing industrial demand. Drilling is underway on our Tehran property in Argentina to prove up a cesium resource. Cascadero's patent-pending leach process has the potential to make Cascadero the lowest cost supplier of cesium in the world. Visit our website, cascadero.com, or phone us at 604-924-5504.
Welcome back. We're chatting with John Kaiser. John, did any companies announce big news during PDAC?
There was no big spectacular discovery hole, nor was there any focused buzz about a very hot emerging new play, other than general discussion about stuff like, wow, look what's happening in the Windfall District. Isn't this amazing? But one company put out some drill results which are characteristic of what I was describing earlier, namely throwing a lot of money at a project, at a mineralized system, to better understand it, to see if there's more to it than was established in the past. And that was Probe Metals, which on Monday morning put out a news release from the last of the results from last year on its Val d'Or East project, which is in Quebec. And that reported 1,122 grams per ton over 0.7 meters. And that's about 30 ounces of gold over, just under 1 meter. So it's a high-grade snippet. The market did not respond significantly, or not much at all. And although it's a very flashy number, when you ask, why is the market not interested? Well, it's the geological context that is relevant. In this case, this is the project that had the old Bellevaux mine, which can be mined out. It was a north-south dike, and it was mineralized, so they mined it from top to bottom until it was depleted. And what makes this dike tick is a series of east-west parallel quartz tourmaline veins, which by themselves, although they have good grades, they are not the space between them. You end up diluting it. Adventure Gold, which Probe acquired early last year, it tried to outline an open pit scenario where it would mine these veins, this vein set as an bulk tonnage type scenario. But what Probe has done is, as it's been drilling deeper to better understand the system, it has found additional north-south dikes through which these vein sets cut. And these dikes existed before the mineralization came in. And when the mineralization came in via the veins, where the veins intersected the dikes, that's where the gold would bleed into the dike structures, which have a better receptivity for gold mineralization than the surrounding rock. And what this news told us was that to the west, while trying to test a deeper dike that they had found last year and reported, which is also a new discovery, they intersected an additional dike, which actually has a higher intersection of gold than seen in the earlier ones. So without the geological context, this does not make an awful lot of sense to the market. They can just dismiss it. Oh, you hit another one of these high-grade little things that do not add up. But Probe Metals, which raised another $13.5 million in February in flow-through money, it now has $40 million in the treasury. It is in a position now to systematically explore the Val d'Or East project, follow up these new dikes, and potentially outline underground mineable zones that could put this thing back into production. So this is the kind of news that we're going to get more and more of as this year progresses, as these juniors hammer away. And a project like this will ultimately lead to a 43101 event, a resource estimate, which will surprise people. It is this incremental exploration progress which is taking away the tyranny of market expectations for a spectacular barn burner hole. It's really important for retail investors to understand that this is the whole new way that the market is evolving.
Were there any other Discovery Watch juniors among your BNN top picks?
Well, last year I gave 3 picks when I did my BNN market call appearance for 1 hour with Andrew Bell. They were Scandium International, Arizona Mining, and Peregrine Diamonds. Now, Arizona Mining was, of course, the big star. It went up 10 times in price as the Hermosa Taylor project evolved into a major world-class zinc, lead, silver discovery. The second in was Scandium International, which managed to double. That's my Scandium project. And the third was Peregrine Diamonds, which managed to muster a 40% gain over the year and is pretty much stalled out now, not going anywhere. For my new crop, Scandium International was one of my top picks. The other one was Probe Metals. Now, Scandium International had a really good week, in part because I happened to be on BNN, but also because the 20% project owner, Scandium Investment LLC, the principals were all on the PDAC floor at the booth. You had to really pay attention to recognize them. They were checking out how does this world work and so on. And I sat down with one of them and talked about the future of the company. They have not yet made up their mind whether they're going to stay with a 20% project interest or convert into a 20% equity interest. But while talking to them, it became very clear to me that if they're going to pony up $20 million, in addition to the $2.5 million they've already put up, they're not going to get any value from it unless the entire $100 million is arranged. And I pretty much got the sense that once the mining lease is in hand, the raising of the $100 million to put this project, which they very, very much like and can't quite understand why the market doesn't share their own enthusiasm, that $100 million will happen fairly quickly, and it'll probably not come from Bay Street. It'll probably come from a much bigger league of capital. And the company also put out an important news release last week announcing that it has done a deal with an Australian aluminum recycler called Weston Aluminum, which will allow them to make master aluminum scandium alloy. And the news release was overlooked by the market because it sounds like one of these really boring mumbo-jumbo type releases, but it is actually really important because it demonstrates that the company has developed the in-house expertise to make master aluminum scandium alloy. They are in essence carving out part of the Weston recycling facility to make master aluminum scandium alloy, which allows them to control the sale of this material to all the different end users and fabricators who will want to acquire varying amounts of it in order to test their applications. This is critical for the company because a big question is where's the offtake for the 40 tons of scandium that you're going to produce? They will probably have offtakes in hands for a portion of that output, but it really doesn't make sense to have all of it allocated to a handful of purchasers. It is better to be able to make it available for many parties because the potential for orders that evolve when parties have successfully used aluminum scandium alloy in their products, you want as many as possible because this story is not about putting in a 40-ton per year operation. It's about putting in the infrastructure to expand it to 80 tons per year and then again to 120, 150 tons per year. So this is finally getting traction with the market. Scandium International had a big week this past week, and I think we're finally out of the sort of hole that we're in where the market doesn't take this story seriously.
One of your big disappointments from last year, Uravan Minerals pronounced that Cameco has terminated the Stewardson project early, but retained a 25% stake in it. Is this good or bad news?
Well, Uravan Minerals last year was an example of the market's obsession with kill shots in discovery exploration. The company on its 100% owned Outer Ring project had generated a target based on its geochemical strategy of using radiogenic lead isotopes to detect deposits deep at the unconformity in the Athabasca Basin. This would be uranium deposits. They set up their kill shots, and unfortunately, they got the complete opposite of what they expected. The stock crashed from 30 cents down to 6-7 cents, and management, looking back at the results, sort of said, well, obviously, the source of this stuff is not in this particular location, so they shut that down and returned their attention back to the Stewardson project, on which Cameco has spent $5.5 million over the past 3 to 4 years as part of a $7 million earn-in to earn 51% and allow it to go to 70% by spending another $15 million. Cameco did not do any work last year after drilling several holes in 2015, which showed that, yeah, we're in the right setting, but obviously we're not close enough. At the time, they did not drill in the ideal spot because of logistics. Cameco has run into its own problems with Revenue Canada. It needs to resolve a dispute about transfer pricing. It is also starting to suffer the consequences of a very weak spot price in uranium. Long-term contract prices have sunk as low as $30 a pound. And the reason is that since 2011, Japan's nuclear reactors have been on hold, not producing electricity, not consuming uranium, but still taking uranium as delivery on their long-term contracts. Fukushima continues to make people in Japan very much against turning the nuclear reactors on again. We've got now 5 years worth of stockpiles in the utilities. The market has been very concerned about, what if Japan decides permanently that that they will no longer use their nuclear energy? Then the market will have to eat 5 years of accumulated stockpiles. The hope is that they will decide that they will in fact resume generating electricity from nuclear energy, and that will gradually absorb the stockpiles. Now, in the last few months, Japan's reason to reconsider following Germany's lead in shutting down their nuclear energy industry has really been driven home by Trump's threats to, we're going to make you pay if we're going to continue to protect you. The antics from North Korea in the last month are really raising the stress level in this part of the world. The United States and South Korea are doing exercises to show Kim Jong-un that, he's not going to get away with stuff. China is getting very agitated. And poor Japan is sitting there wondering, are we going to end up being orphaned by our protector since we did the deal at the end of World War II that we would not develop nuclear weapons? Germany is already starting to regret that maybe we should have kept our nuclear industry, because if we end up abandoned by the United States between Putin slowly encroaching from the east and France turning into a right-wing authoritarian country with Marine Le Pen possibly becoming the leader, but they cannot re-weaponize because they no longer have nuclear energy. And nuclear energy is the source of plutonium. The only reason we use uranium in nuclear reactors is because in the 50s it was decided that, we're going to use uranium because from thorium we can't get the plutonium, which is the key input for nuclear weapons. So Germany's already out of luck. Japan is now reconsidering, and they're not going to tell you that this is the reason. But I wouldn't be surprised if they make a strategic decision that overrides the will of the people to maintain their nuclear energy industry. And that will finally give the uranium spot market a chance to rise and long-term prices to rise again. In the meanwhile, Eurovan now has done a deal with Cameco that changes the deal. Instead of another year of nothing happening and then Cameco defaulted, both parties have agreed that Cameco gets 25% of the project working interest. Eurovan has 75%. So all of a sudden they're in control of a project where they are very confident that they have all the ingredients for a major discovery. Even Cameco in its CMIC program has published a poster which pretty much demonstrates that, yes, the method that Eurovan has deployed does work. Now we're looking at the possibility of is there any exploration or uranium major who might be interested in following the steps of an Agnico Eagle and perhaps do a strategic deal with Eurovan and become do a private placement that gives them 19.9% and in a position to benefit from whatever discoveries Eurovan may make in the Athabasca Basin deploying its new exploration method.
Discovery Watch with John Kaiser. We'll be right back.
Aben Resources Limited is a gold exploration company with significant projects in British Columbia, Saskatchewan, and the Yukon. Trading on the TSX Venture Exchange, symbol ABN, and the pink symbol ABN-AF. Surrounded by world-class gold deposits and mines, Aben's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at abenresources.com.
Gem International is a new diamond explorer in the richest diamond producing country in Africa, located next to the fourth largest producing diamond mine in the world. International Spotlight is on an 1109 carat diamond recently discovered in Africa by a fellow Canadian junior. with a proven operator and finance team. GEM International trades on the TSX Venture Exchange, symbol GI. Visit us at gemdiamondmining.com.
Welcome back to Discovery Watch with John Kaiser. I understand a junior announced a deal with a major on Monday that has stunned the street. Can you tell us about it?
Goldstrike Resources, which has a number of projects in the Yukon, still fairly early stage projects, announced a deal with Newmont that absolutely flabbergasted me because it is a win-win deal for the junior and the major. And what's particularly interesting is that Newmont has tended to be amongst the stodgier majors out there in the gold sector, which has not historically done good deals with juniors. So to see Newmont coming out and doing a deal with Goldstrike on the plateau, this is really significant. And the plateau project is in the eastern part of the Yukon. All the fuss has been in the White Gold District, which is in the western part of the Yukon. And there we've seen a new company, White Gold Corp, into which Agnico Eagle has put a whole bunch of money, which acquired all of Sean Ryan's properties. That company has raised $25 million for still early stage exploration in that area. Now we've seen Newmont step over to the eastern side and do a deal with a junior that is extremely strong. The first part of it allows Newmont over the next 5 years to earn 51% by paying cash $6 million U.S. and spending $13 million U.S. in stages over this period. And once they have vested for 51%, they will have the option to go to 75% by spending another $16 million and delivering a feasibility study by 2027. At that point, the junior Goldstrike will have the option of either putting up 25% of the capital cost or dropping to 20% and letting Newmont put up the money. If along the way Newmont decides that after vesting for 51% and indicating that, or not going ahead with the 75% option or stopping and not going all the way, it reverts back to a 49%. And this is a really important clause because it enables the junior to regain operatorship of the project and try and do something positive with it. And the other thing that they did was they bought a private placement in the company at a premium to the market, 47 cents. The stock was around 20, 25, 30 cents, probably about 50-70% above the market. And it's only about 7% of the issued stock now, but it enables Newmont, it gives it the right at any point to say, we want to do a financing at 15 to 20% above market, and in order for us to go to 19.9%. Now, the company doesn't need the money at the moment, and all this cash that it's going to be getting in stages enables it to go explore its other projects in the Yukon. So what Newmont has done is it said, we will take care of the Plateau project, but we will also make sure that you are cashed up enough to continue your job as a prospect generator and dressing up these other projects. Newmont doesn't have any rights to any of these other projects, but it's a very big win-win situation, and everybody's talking about it because there is complexity in the deal, but all the complexity makes sense. Hopefully this becomes a template for how the majors are going to do deals with the juniors. With regard to the Plateau project, it is an orogenic lodes type of deposit, the sort of thing that you see in the Abitibi Greenstone Belt and also see in the Mother Lode Belt of California, potential for high-grade deposits that can go very deep. So now with a serious amount of money coming into this project, we could see another major grassroots discovery emerge in the eastern part of the Yukon where there isn't a lot else going on.
Is Newmont's return to the juniors causing any excitement among other juniors?
Well, one of the juniors that has been on our Discovery Watch list, Nevada Exploration Inc., has reason to be very excited by this development. Now, Newmont owns the checkerboard Santa Fe lands in Nevada, and these were granted ages ago to the Santa Fe Railway Company to build a transcontinental railway in the United States. And so every other square kilometer of land surrounding the railway was granted to them with rights to both surface rights and the underground rights. And that eventually was acquired by Newmont. So Newmont has all these big checkerboard land positions, and the stuff in between is filled in by other juniors. And Newmont has been reluctant to do very much with these checkerboard lands. In this case of Nevada Exploration Inc., their big story has been the gold in groundwater exploration method, where they literally sample water in these gravel-covered basins in an effort to see if the Carlin Pathfinder toxics and gold have been dissolved by the water and carried not far from the original source. Basically generate blind targets that are in the bedrock but obscured by perhaps hundreds of meters of gravel. And in the Kelly Creek Basin, this is a big area to the south of the Twin Creeks Getchell projects, 20 million ounces discovered by Santa Fe several decades ago. And to the west are lower grade deposits. Silver Standard is currently mining the Marigold deposit, fairly low grade. A little bit to the east is the Lone Tree deposit, also mined out. These are all upper plate hosted, structurally controlled system. Newmont happens to own this. To the east of this, Nevada Exploration Inc. has been doing its work. It has a big chunk that's 100% owned, but it also has the squares in between within Newmont's checkerboard. And the work that Nevada Exploration Inc. has recently done with its new Scorpion rig, which allows water samples to be collected in 3 dimensions and also to sample the alluvial, they are now outlining a significant target that appears to be another Lone Tree style structurally controlled high angle system. And quite importantly, this new rig that they've created, it's been able to pick up alluvial samples just above the bedrock, and the company assays them, and they've been picking up 0.15 gram per ton values in this, which is well above background. And they reported this in early February, and the market yawned. But this is what's called a lag deposit, and it's telling them that, yes, in this Kelly Creek Basin area, there is another gold system. This is debris that has been eroded from the deposit and laterally dispersed, and they are now using the Scorpion rig to basically outline the anomaly. And the news that Newmont is now back in business, looking for large district scale type plays, this was music to the ears of Nevada Exploration Inc. I do not know if they are negotiating with Newmont. I do know that in the past they have tried to sell Newmont on the concept. Perhaps with Newmont making this big deal with Goldstrike, it's a signal that Newmont is open for business and ready to look for big new systems through strategic alliances with juniors. And I'm sure others with a similar checkerboard situation are wondering the same.
John, thanks for the update.
You're welcome, Jim.
We've been talking with John Kaiser, his website, kaiserresearch.com. Discovery Watch will be back next week. I'm Jim Goddard.
Comments made on Discovery Watch are an expression of opinion only and should not be construed in any manner whatsoever as recommendations to buy or sell any financial instrument at any time. Archived online at howstreet.com. Discovery Watch is a production of How Street Media Incorporated.